Losing someone you love is incredibly tough. And let's be real, dealing with financial paperwork is probably the absolute last thing on your mind right now. But securing that financial safety net, it's vital. So in this explainer, our goal is to completely demystify the life insurance claims process. We're going to walk through exactly how to file a claim, step by step.
But first, a quick question. Did you know that a staggering number of life insurance claims are delayed, or even flat out denied, simply due to a lack of understanding? It is a shocking reality. A simple lack of knowledge often causes these massive bureaucratic delays, which, just makes an already devastating time even harder. You do not need the added stress of a back-and-forth paper war with an insurance company while you're grieving.
So, to ease that anxiety, we've broken this whole complex journey down into 6 really manageable steps. 1. Life insurance policy basics. 2. Gathering documents and filing. 3. The claims review process. 4. Receiving your payout. 5. Roadblocks, denials, and appeals. And 6. Wrap up and final thoughts.
All right, let's jump right into part 1, life insurance policy basics.
Before you even think about filing a claim, you've got to understand the coverage, right? Basically, there are 2 main types you're going to encounter. First up is term life insurance. Think of it kind of like an hourglass. It provides coverage for a set number of years, usually somewhere between 5 to 40. Once that sand runs out, meaning the term expires, so does the coverage. On the flip side, you've got permanent coverage, like whole life. This one never expires, as long as premiums are paid, and it actually builds cash value over time. You might also run into universal life, which is a similar permanent option but with more flexible premiums. Figuring out exactly which one you're dealing with is absolute step 1.
Moving on to part 2, gathering documents and filing.
Here's the deal. Insurers are rarely, if ever, going to automatically reach out to you. You have to be proactive to get the ball rolling. First things first, locate the policy to see if the passing, whether it was natural or accidental, is actually covered. Now, if the original policy is totally lost, don't panic. You can use the NAIC Policy Locator tool online. Step 2, get copies of the death certificate. Step 3, contact the insured directly to report the passing and ask for the paperwork. And finally, submit the formal claim form they send you. Now, organization is absolutely key here if you want to avoid delays. So what do you need? You need a certified death certificate. And listen carefully, insurers almost always demand an original, no photocopies. You're also going to need the policy number and your identification details, like your social security number and date of birth. When you're actually filling out the claim form, triple check the personal details, the policyholder info, and the official cause of death. A simple typo, that's literally the #1 reason claims get bounced back.
You might be wondering why we're being so incredibly meticulous about all this. Well, it's because the financial stakes are huge. The average life insurance payout ranges from $66,000 to $285,000. That is life-changing money meant to secure your family's future, maybe cover funeral costs, or pay off a mortgage. Getting this paperwork perfect ensures that safety net opens exactly when you need it most.
Okay, let's look at part 3, the claims review process. So you've gathered the docs, you've hit submit, and now the waiting game starts. What's happening behind the scenes? Well, by day 5, the insurer is usually just verifying your identity and the policy itself. Around day 15, they're digging into the official cause of death to make sure no policy exclusions apply. Ideally, by day 30, a standard, straightforward claim gets approved. Now keep in mind, things like homicides or accidents where the documentation isn't crystal clear, those will heavily delay this timeline. But having flawless, original paperwork from the start can actually help speed things up.
In most states, the typical legal time frame an insurer has to pay out an approved, straightforward claim is between 14 and 60 days. So if your claim is taking longer than 60 days for a standard natural death, that is a huge red flag. You have every single right to pick up the phone, call them, and demand a status update.
Let's move to part 4, receiving your payout.
This is the positive outcome we're all aiming for. The claim is approved, and it's time to distribute the funds. You usually have a couple of choices here. A lump sum payout gives you the entire death benefit all at once. This is really ideal if you have massive immediate expenses, like paying off a house or covering a funeral. The other option is an installment payout, where you receive structured payments over time. A lot of beneficiaries actually choose installments to seamlessly replace a lost spouse's monthly income, and honestly, to prevent the temptation of spending a huge lump sum all at once.
Now for part 5, roadblocks, denials, and appeals.
We have to talk about the uncomfortable reality that things don't always go perfectly, and you need to know why so you can be prepared. One of the biggest roadblocks is something called the contestability period. This is a super strict 1 to 2 year window right after a policy is bought. If the policyholder passes away during this specific time frame, the insurance company has the legal right to heavily investigate the claim. They'll look for material misrepresentation, like saying you don't smoke when you actually do, or they'll review suicide clauses. It's a critical window.
Beyond that contestability period, what are some other common denial reasons? Well, the most frequent one is just a lapsed policy due to unpaid premiums, meaning the coverage simply wasn't active anymore. Other culprits include fraud on the initial application, an excluded cause of death like participating in an undisclosed dangerous hobby or illegal activity, or even beneficiary disputes where multiple people step up claiming to be the rightful recipient.
But hey, if you hit a wall, remember this: you have rights. If your claim gets denied or unreasonably delayed, demand a clear explanation in writing. Do not just take a no. You have the right to file an appeal and engage in formal dispute resolution. You can request strict deadlines. And if you feel like the company is acting in bad faith, absolutely reach out to a life insurance lawyer to advocate for you.
Which brings us to Part 6, Wrap-Up and Final Thoughts.
We've covered a ton of ground in this explainer today, from policy basics right through to protecting your rights. Let's recap your core game plan. 1. Find the policy and know what kind it is. 2. Gather your original certified documents. 3. Submit your paperwork promptly and accurately. And 4. Follow up. Seriously, be your own best advocate and keep tracking that claim until the payout is securely in your hands.
Oh, and here is one final, incredibly helpful tip. If you suspect your loved one had a policy but you just can't find it anywhere, do not give up. Unclaimed life insurance funds eventually get handed over to the state. So search that NAIC policy locator tool we talked about earlier, or go check your state's unclaimed property database. Make absolutely sure no money that belongs to your family gets left behind.
Just a quick standard disclaimer before we wrap up. While this explainer gives you evergreen information that applies to a really wide audience, every single insurance contract is uniquely written. Things like tax implications on your payout can vary a lot depending on your specific situation. So please, definitely consult a licensed financial advisor or insurance expert to get advice that's tailored just for you.
Learning about how a claim is paid out usually makes us reflect on our own planning, doesn't it? So I want to leave you with this question. Are you prepared to secure your family's financial future today? Make sure your loved ones know exactly where your policies are kept and who they need to call. That way, when the time comes, they can focus on what truly matters. Thanks so much for joining me for this explainer, and I will catch you in the next one.